Charlie Munger on Bitcoin today. Quote, I should say modestly that I think the whole damn development is disgusting and contrary to the interests of civilization. He owns banks that launder billions per year and have been charged criminally. Give me a break, says Anthony Pompliano.
Right. Pomp makes a good observation there. 75% of the Berkshire Hathaway portfolio, when you break it down, is banks. And the banks are the first in line from the central banks to get all the bailout money. Remember, Berkshire Hathaway has been bailed out twice. Without those bailouts, they would have been bankrupt long ago. They're underperforming even with the bailouts. They're still underperforming the S&P and NASDAQ for more than 10 years. These guys are they're bums. They're charity cases, right? So, and you say income is up 30%. To be clear, that's not wage, that's income. So it's people getting minimum wage plus government transfer payments that are being stuffed into their mailboxes. Well, Charlie Munger and Warren Buffett, their income is up by billions because instead of getting $1,800 or $2,000 from the government, they get $10, $15, $20 billion from the government. But they're no different because they've never invented anything. They've never built anything. They just sit in their chair down Omaha, Nebraska, and wait for the government to send them money. And that's all they do. And they're bums and they're parasites.
The thing is, his statement does expose, first of all, he said, Bitcoin, he hates the success of Bitcoin. And what the success of Bitcoin does is expose the entirety of the lie of the financial system of which he has benefited enormously. But it also shows you that for all their smarts and all their value investing and looking, digging into the books and examining the books of these companies and meeting the CEOs and doing all the due diligence, that's a waste of time and money in a roaring 20s when money is being thrown out the door like Spanky back in the 20s and the Little Rascals throwing money out the window. Well, that's what the government is doing. And so you don't need to be any smarter than a monkey. And some people say Charlie Munger kind of looks like one, but the fact is anybody can make money. And that is shown as you mentioned, Warren Buffett buys more of his new favorite stock, Berkshire Hathaway, but is a net seller on market as S&P 500 set record highs and the Buffett indicator raises the alarm. Total U.S. market cap is now equal to 226% of U.S. GDP, way above the 100% that Buffett sets as his bubble threshold. So over twice as high. Anybody who bet on the bubble is winning. Of course, those value investors are the sort that will get out of the market thinking, oh, this is a bubble. He would have got out at 100%, started scaling out, and it's now doubled since then. But this is the roaring 20s.
Right. Well, this is where it gets pernicious and ugly in the fiat money world, where Munger and Buffett, because they use the billions that the government gives them to lobby the government to do things like repeal Glass-Steagall under the Clinton administration, or to get rid of the laws that prevented companies from buying back their own stock, which is what happened under Reagan, because it's patently market manipulation and stock manipulation to buy back your own stock. And when you can do that with money that the government's giving you for free or at a 0% interest rate, you're clearly in a predatory position that's bankrupting large swathes of the economy and causing unemployment and causing these deaths of despair. The number of opiate overdose deaths last year up by 20,000 to 90,000. Thank you, Charlie, and thank you, Warren.
Obviously, they have more than $150 billion just sitting there like a melting ice cube in their treasury, just sitting there doing nothing because they look around and they see nothing worth investing in. But this is at the end of the past 20 years since they did lobby for the repeal of Glass-Steagall, the hollowing out of the U.S. economy. And in fact, he also mentioned at this point, by the way, at the shareholder meeting this past weekend, that Berkshire Hathaway, JP Morgan, and some others were going to take on the healthcare racket in America. And he said something along the lines of like, well, this racket is bigger than us, right? It's 17% of the US GDP. And these powerful multi-billionaires running the financial sector couldn't make inroads into it because of the predatory, those sort of moats that they set up around their racket.
Very telling that Buffett referred to America's healthcare system as a racket. And, a lot of people describe America as an emergency hospital waiting room disguised as a country.
Yeah. Well, I might have put words in his mouth by saying he said a racket, but that's how I read what he said, is that it was a total racket that even the likes of he could not.
I read the quote. It was something, he mentioned that healthcare is 70% of GDP.
Yeah.
It's a huge percentage of the global GDP. And that too, he did refer to oligopoly, that it was hard to move that. It was hard to make an impact on that. It's an entrenched oligopolist cartel. That's 17% of GDP, when it should, by any industrialized standard country, that shouldn't be more than 3 or 4% of GDP. All that remaining trillions and trillions of dollars goes to the rapacious kleptocrats at the top who are literally stealing trillions. And it's the primary reason America's become a laughingstock, in my view.
Well, I'll tell you who's laughing, and that is the people of this huge nation. And they are celebrating their stimmies, and it is the roaring 20s for the people. So let's look at these, roaring 20 sort of numbers. This is amazing. Free money stimmies blow out consumer income and spending on goods for a glorious what the heck chart of the year. This is just freaking nuts, says Wolf Richter. It explains the record trade deficits, bottlenecks, shortages, and inflation pressures, among other distortions. So what the heck overshoot? Personal income, all sources. This is remarkable. Now, this goes back to 2015, and this is a personal income. That includes the government transfers. But these are normal times. These are the good times, right? Markets were hitting all-time highs every year, all throughout the 2015, 2016, 17, 18, 19. And during a global shutdown, all production shut down here. Here is the income of America collectively. All 330 million people. This is the household income, everything included.
Right. So to understand why this is a problem and why the comparison to the 1920s is important is because at the end of the 1920s, you had the crash and the depression. And what fueled the speculative bull market on Wall Street in the 1920s was debt or margin. People could buy stocks for 10 cents on the dollar. And this ballooned up to unsustainable levels, and it crashed, and we had the depression. So how does the debt, you already mentioned that that's 200% debt to stock market valuation.
226%.
Right. So that's one indication of how much debt. It's way past where it was in the 1920s. How about the Federal Reserve Bank? Well, the Federal Reserve Bank, they say they've got something like $7 or $8 trillion worth of assets on their balance sheets. The resale value of those assets is maybe 50 cents. Right? Because
that's being very optimistic.
Right, because they technically those assets have zero value. If they put them on their books at 100 cents on the dollar, but they had to buy them from bankrupt institutions that would have had to declare bankruptcy, like JP Morgan. Instead, they swapped the insolvent junk on their balance sheets for fresh treasury bills, liquefying the banks, like Warren Buffett. That's how he made his billions, stealing from America. And they put it on the Fed's balance sheet until such time as it is a huge warehouse full of nitrate, plutonium and nitrate sitting next to a fireworks factory, right? At some point, those two come together and kaboom.
Right. But the ordinary people, you're going to love, this is the phase of a Ponzi that you love. You don't say no to this, right? How do you say no to this? Your income collectively, everybody around you, was 19 trillion in 2019, just 2 years ago. Today, it's over 24 trillion, right? Okay, that's a lot more money.
What?
Yeah, 19 trillion up to 24 trillion. That's the income across America. A lot of it printed up, sold to the Fed, to a whole banana republic sort of thing. Here is the consumer durables purchases chart. Again, here's going back to 2008. That's a financial crisis when it dipped. Look at that, the what the heck chart of durable goods. These are like washing machines and refrigerators and all that sort of stuff. Huge surge. So all that money is being spent by a lot of people, a lot into the savings, but a lot into these durable goods. And that's why you see this huge congestion in the freight business, all the goods, all the money being thrown like Spanky at the window, the little rascals at China. Here, China, take my money. China sends over, a refrigerator for you or a washing machine.
So the income went from 19 to 24 trillion since 2019. And that $5 trillion, we know from tracking the cargo ships between here and Asia. So that $5 trillion we sent to China.